everyone. Welcome back, traders, to a new session of charting across the board. Today's July 14th of 2026. Nearly a year ago since Bitcoin has been declining over 52% to current lows at 57,000. I hope each one of you are having a fantastic summer so far with kids and family. If you're at work, take your time, focus, come back later and watch the levels that we are working on in the price action across different trading instruments. Last March, we navigated the price action on crude, gold, DXY, Bitcoin, obviously the S&P 500, as well as, I believe I already mentioned DXY. Today, we have new variables. Same variables presented then, now completed. However, as the foreign affair continues to re-emerge, there is no new data set in that aspect, but the re-emerging conflict is what is catching my attention based on the levels for the price action on the crude. Okay, to refresh the memory, we need to look left. As well as we always mention, looking left, market leaf clues. Previously, a major information on the daily was printed on the crude. Why we're looking at the crude? Because this impact the global market as a whole, not only within the US, but the globe. Therefore, we'll be looking at gold, DXY, gold, S&P 500, as well as Bitcoin. The pattern previously navigated last March, also with a pending completion point, was this major bullish garly. As you guys know, bullish garlies are one of the major patterns that present a key turning point. Okay? Key turning points in the market was within the range of $57 and $55 region. $55 region was to not break the previous low. Okay? The levels were defended then, okay, and the major upward traction occurred. Major parabolic rise took place with all the narrative, all the news going on the financial news. But then we encounter from an information, a W formation, a bearish structure. For those unfamiliar, keep in mind an information represents a bullish pattern. A W formation represents a bearish structure. Where do we go from the 57, 55 region into the 120, 119, where a W formation was presented, where the key turning point certainly presented here in the 114, 110 region, where again, the W formation was presented, and we connected those potential pending points to where? From the lows back to the highs, we computed the first rejection, okay, for the B point, then a C point, and now the completion point of this major bullish garly on the daily time frame. I was listening to, I believe his name is John Hogarth, the other day, and he mentioned that he goes on YouTube, type live trading, and he encounters many narrators, in this case, not necessarily traders, that go over the chart after they present themselves, not before. I remember we used to have an episode called Forensic Analytics. We can still do the same. We often do the same within our community, where we navigate the chart for what may occur later. In this context, what may occur later, indeed, on the crude was the W formation. Okay, we always navigate these levels. It doesn't mean that we trade in a perfect manner. I want to emphasize, as we always repeat, that trading and analysis are two complete separate and different disciplines. Okay, we may have the proper reading, but the execution may lag behind a proper management. But directional bias is what is important to trade within the primary trend, as Charles Dow suggests. Okay? So therefore, along the wave, after the first mega rally on crude, a W formation was printed after, following the major information at the lows, another W formation, and now we completed this C to the D. The traction chart is from April 6, 2026. Now we are back here, my friends, to where in the 60A region. This is where we are now, okay? I'm trying to identify the main Garley. This is the pattern right here. Reactive move at the first completion point of the structure and information, a major one. Does this mean that we're going to break above the previous high and see higher readings on inflation? Today, obviously, we're seeing a data from the previous month when all was declining, okay? But now we need to pay attention into the forward looking for what may come later, where we use a simple chart here or a simple tool known as the pitchfork channel, anchoring the lows, back to the highs, back to the lows. Is crude now heading much higher than the previous highs? Potentially, if these support levels are continuing to be defended in the 60A to 62 region, okay? These are the main support to not break below, and mainly also the X point of the structure where the main rally started at the end of last year, okay? We mentioned that Bitcoin was topping and other assets such as the crude was presenting a potential major turning point then, okay? So now that crude has manifested into an upward rally from the 67, 68 region, printing nearly 14% as of today, okay? At current levels, slightly lower. We are observing that buyers indeed presented themselves here, meaning that a new support may occur within this region, already the first reactive move. So therefore, if you guys remember, we like to compute all those variables within the harmonic framework. If crude continues to find support, all right, at 68 region or 62, we can compute the reciprocal move from the first leg of the move, the first upward traction from A, B, this one yielding a harmonic ratio, Fibonacci retracement at the 0.786. As long as crude remains within the C point at the 0.786, $68, we then have the next reciprocal move into the 1-272, okay? This is a similar pattern we go over and over. It was printed on Bitcoin, many other assets, also the S&P 500. You guys remember? All the way to 61, 6,300, and then a 20% decline, okay? Now, the first leg, A to B equals CD. Are we going to encounter new highs on crude as time progresses? That can certainly be the case, once again, as long as these key support levels are not violated. 68 region to 62, okay? That will be the violation if prices go below 55. That was the first range of the mega rally, okay? Now, with all the narrative, all the conflicts re-emerging, can this be the case, my friends? Technically speaking, yes. If the market presents themselves, this can continue to be the case for another leg of the move as long as, okay? As long as prices are defending these levels. This is where I wanted to go over crude. Now jumping quickly and briefly into the next asset, okay? We got the crude. The S&P 500 in the most recent video, if you guys watched the last one, we went over a potential pending information. Similar manner, a W in green, leading potentially to an M formation on the hourly time frame. In the video, we navigated the levels that as long as the S&P finds support within the 7,300 region, another larger structure may unfold if these levels were indeed to be defended. Where did the S&P 500 went to since June 18th, nearly a month back, okay? This is indeed prior to the development, not after, okay? We got indeed the information defended 3 times. The first test, June 25th, another test on the 26th, and the last one, the last support, same day on Friday at the session close at 73.68 region. Now, the upward traction that led us all the way to current price levels, okay? Certainly, there has been other patterns on minor time intervals, such as the 15 minutes and the 5 minutes. But what we're observing now continues to be the primary trend, where if the same technical proposition unfolds in the expected manner, we then move into the 4-hour, or the daily in this case, for what is, again, a pending W formation. The first argument indeed occurred. 2 arguments: rejection at the PRC, okay? Rejection, bearish structure, a W, the pattern in green, leading to an M formation. An M resembling the shape of an M formation, okay? For those of you who are new to harmonic trading. The information indeed presented itself, and now reacted move, major move on the S&P 500. The argument now is, are we going to experience, okay, this was the same technical proposition as long as the C point pending then was defended at 73 region, we could potentially see an upward move into the 1.618. That will be the case here at 7,900. Overspill obviously to the key psychological level at 8,000. But we're not there yet. We must first break levels by levels. In this case, the B point. Okay, the B point act as the BAM, the bad action magnet move, a price phenomenon that occurs that after piercing above the B point within the harmonic framework, the argument strengthened to complete the pending formation. In this case, it's a pending formation. Why? Because the pattern has not yet reached its completion point at the 7,900. There are levels by levels. In this manner, once again, we can also compute other levels within each quadrant. In this segment of the move from the previous high at 7,600, we can observe a new trading range, okay? There might be also another pending W formation. From the highs to the lows, a B point. This is now a key level on the 4-hour, as well as the C point. Why? Harmonic pattern traders are already observing a potential pending W formation for a bearish butterfly if prices goes to 77 region as a first test. Then the next extension into the 1.41 will lead us to the same range, 77.72. Okay, 77.74 to be precise. And the last one, obviously, the 1.618 for the last PRC on bearish butterfly at 7,800 region. What do we have at those levels of confluence? The pending bearish deep crab, the larger one on the daily. Let's not also forget the diamond pattern. The prices are still trading within the same, obviously, trading range, consolidation after the major cipher pattern that was found at the support zone at the 7,300 region. Then a reactive move, printing a ceiling here, okay? We break above currently, and now are we going to experience the measure move of the structure? We mentioned that these patterns are known to be neutral patterns. Why? Because they break on either direction. Also, they present a key turning point, as well as the measure move of the structure leading to the levels of confluence at 7,800, as long as the previous low are continuing to be defended in the 74,000 region now in this case. Okay? Or 7,400 region for the S&P. Okay, there are many opportunities to be traded here on minor time frames, but again, the 4-hour has been respected. First with a cipher reactive move, we have a shark, then the technical proposition for a W formation presented last time, and now the M formation, the completed M formation. Therefore, are we now constructing the larger W formation? We'll see, my friends. Obviously, we keep these patterns updating on the community. If you're interested, visit us. You are welcome to put your analysis, listen to our commentary. If you agree, disagree, everyone is welcome. Okay? Again, none of these represent any financial advice, but rather an interpretation of the technical information. The next chart I would like to go over is also gold. If you guys remember, we have a pattern back then, a W formation. In similar manner as gold, as the crude, we have a W formation, a bearish garly, that led to the first rejection. Okay, from the D point at 5,400, we mentioned that there might be an argument for distribution. What occurred? A decline into the 4,000 region. 4,100 that has become a key support. Now, buyers are struggling to recapture the zone 4,100. However, if prices continues to decline, we can observe, as mentioned before, a similar structure as the crude. A W, okay, W pattern potentially leading into an M formation. If we go back into the chart on gold, we can observe that there is indeed a W now potentially leading to a garly pattern. If I go back into my garly pattern here, this is what I'm tracking on gold now. If prices continues to decline into the 3,700 region, we printed a low to 3,900, but 200 points or $200 from the pending W formation or M formation in this case for a major bullish garly before gold revisit the 37 to 3,500 region. Looking left, that was indeed the previous turning point prior to the major advance into the 4,000, new support at 37, and then the last leg of the move into the 5,600 region. Therefore, also there is an upward trend line for the upward levels as resistance and lower levels as support known as a falling wedge. A momentum shifting structure also aligning here with a pending bullish garly. If gold managed to find support or new buyers, the new support levels that may occur into the 37 to 3,500 region. Okay, these levels. 37.59, that will be a key level of support for gold to be defended, and maybe another upward move as long as these levels are constructed as support. Lastly, DXY, and also I'm forgetting Bitcoin. Let's go into DXY and leave Bitcoin at the end. Okay, briefly here on DXY, you guys are familiar with the information. It's been there, not necessarily completing the main PRC, okay? But if we're permissive, this could be the completion point at 95 for what we're looking on the M formation. Another bullish garly where at the lower trend line of this major pearl channel, suggesting the upward trend since 2011. Okay, previously we were looking at these levels back in the previous room, 2021, 2022. Obviously, demand zone, supply zone, meaning support at the lower trend line, resistance at the upward trend line. A supply. Can this be a similar argument as long as buyers are defending the 95 region? That can potentially be the case, but again, there are levels by levels. The main level will be to retest 110 as a hard line of this parallel channel. If we break those levels, we have another retest into the 120s, if that were to be the case, okay? Therefore, Lastly, the last pattern in mind, Bitcoin. You guys remember the main technical position since July 16. It will be a year in 2 days from this main proposition where we stated two levels, the 0.786 at 64,965, basically to round the number up, as well as the 0.886. We went into the 0.786 at 64,924, basically 60,000 region was reached, and we presented variables within minor timeframes. The main one, a pending larger cipher pattern, a bullish structure from the 120s into the lows. Where do we go? We have indeed the first test. Early this year, we printed a 59,000 region, a support recapture, okay, the previous structure support in this case, in this zone at the 0.786. Okay, that was the main idea where we presented other arguments in minor time frames based on this leg of the move in this quadrant for the 12-hour time frame or the daily for a Wyckoff accumulation that was indeed following the entire case since December of last year. Okay, that was when we first presented those arguments for a test, a 98, potentially a decline into the 60s, a new support that indeed completed or manifested with an upward move of over, I believe it was 32% if we compute the main lows at 59 to the current highs. Yeah, over 35%, 38%. We're also looking for, back then, if you guys recall, a W formation. That was a technical proposition for what was then a pending bearish spot to where into the 0.886 at 90, I believe it was 93,000. However, we also stated that a bearish Pesavento Garley was something to monitor at the 0.618 within the 83,000 region. Certainly, decline Pesavento Garley respected. However, on the macro, we're still within the main range. The 0.786 at 64,000 now being retested. Our buyers trying to reclaim the previous support back into support. You will see, my friends, we are looking for October for a potential cycle low as time progresses. Last cycle, we mentioned this could be potentially a cycle top in October of 2025. Now we have experienced major decline since then, some reactive move along the way, but the macro continues to be within our target and radar for the major variation of an information. Something I would like to monitor here and mention is that as long as prices are negating the previous support at 65, even 70,000 region, I'm starting to compute the other ratios we already mentioned on previous stream, that as long as the shark remains in the card, we have the range for the PRC, the potential reversal zone. The first one on the shark, if the 0.786 is violated, okay, we then have the 0.886. Why the 0.786 is an important level? Because it corresponds to a bullish cipher, okay? Cipher patterns and bullish shark patterns present similar ratios. They differ at the completion point. Ciphers complete at the 0.786, reason why we were looking at the longs in the 60s, okay? Up until the previous high in the 83, where we were cautiously monitoring. Why? Because we knew that if the 0.886, mainly 65,000 region was the key support for us back then, was violated. If that were to be the case, that was indeed, we then have the 0.886, okay? Also, all of this is already detailed since a year ago, okay? I'm not trying to reinvent or recreate a chart until the data changes, okay? We can observe here that was indeed the two main levels. The first one, 64 into the 60s. Obviously, if that one breaks, we then have the 0.886 that was indeed also tested from where? We mentioned that there was a monthly key technical level the 0.618 from the main lows, okay? From the lows to the highs into the 15,000. That was another key support for Bitcoin, where at the 0.618 for the golden mean. The golden mean came indeed at 57,700. Now, there are other levels of confluence that we mentioned potentially for an M formation if that were to be the case then, assuming the B point here was printed already on Bitcoin, we were looking for an upward traction. The minimum level was 85. Where did we go? To the point 35, nearly the point 382, which is the minimum level for C legs. Okay. Now, as long as the 0.618 is not violated, there's always an argument for another upward move. Okay. Unfortunately, nobody knows, but we approach the markets objectively, removing any preconceived biases that can lead us to a wrong decision making. Also listening to others who they apparently know what's going to happen next. So if they do, there is poly market, my friends, to make your bet, and good luck. Okay. Anyways, the 0.618, it is still a range for B points on Garleys. Okay. This is the technical proposition I had in mind, as long as, once again, the B point continues to be defended at the 0.618. Do I sustain the same argument? Hard to know unless the 65,067 is recaptured as support. If that were to be the case, we may have the same argument. As of now, I'm looking mainly at the shark. Why? Because this one represents the weekly structure, where I can have a better argument rather than the monthly. Why? Because each candle represents 1 month. Therefore, it is so much data to be weighted on. Unlike the weekly, we already have the completed levels. Okay. So far, both ratios are tested, where if we break below, prices make a new low, another upward move into the 70s per se, resistance, we then have the 100% of 49,000. This is why I highlighted these levels here for the shark range. That goes for the first one. Once breaking below the 0.786, it then becomes a shark into the 0.886, 57,700. Then the 100%, okay, from the lows X to C, we have the 100% once breaking the 0.886. Once again, I want to make that clear. If and only breaking below the 0.886, we then have the 100% all the way to the 1.13. Okay, we'll see how these unfold as we move into the fall. October, that should be an interesting month as time progresses. Everyone, thank you for joining today. I wanted to go over this chart that indeed unfolded from the technical proposition we presented in March, I believe. Obviously, we have taken a little break from YouTube, but on the community, we have more updates on this technical proposition. I'll see you guys into the next one. If you have any question, remember to make your comment, tag us in the Discord group, and I'll see you guys into the next one. And remember to live a life also with an attitude of gratitude. Cheers.
Wow, Sinatra.